Hi, I'm Doug Ramshaw. I'm the president of Minera Alamos. We're a gold producer focused on Mexico. Built one mine. We've got two left in the hopper that we look to build next year and the year after. And I'm happy to be back here with Matt and Crux.
Am I allowed to have favorite CEOs? I don't know if I am.
Well, I'm a president, so you know.
Okay. He's one of my favorite presidents. Welcome back to London,
Good to see you.
Where you belong. You're here for Minds and Money, running around. Obviously, off the back of the success of Great Bear, lots of people wanting to talk to you, I suspect.
Yeah, it was a packed schedule, and that's what you want. You go to the expense of coming somewhere, you don't want to be sitting around not talking to anyone. So yeah, 2.5 packed days. So it's been great here.
Good. But obviously, you're not here to talk about Great Bear.
Nope.
Done and dusted. Discovered.
Done and dusted. That's
right.
yesterday's.
That's yesterday's news. There's no rest. We're here to talk about Minera Alamos. So you got a mine up and running.
Yep.
It's been a few years of kind of scratching, eking out that project in terms of funding and so forth. Your share price has done quite well. You've done it the right way, but now you're starting to up the game a bit, somewhat, aren't you?
Well, a little bit. I mean, certainly the pandemic kind of played into some of the delays. I mean,
right.
we raised money to build the mine in February of 2020. Never let a good pandemic get in the way of building a gold mine. So we built it in the middle of the pandemic. Maybe took 6 months longer than we otherwise would have wanted. And yeah, we've had 3 quarters this year of making money. I mean, it's modest production growth, but I think the most important thing is you mine ounces that make sense and make money. And that's what we've been doing this year. So we've been able to strengthen our balance sheet. We're up to 15 million in cash now, 22 million in working capital, no debt. And I think the beauty of that is, the goal is, as you said, to amp up. And the next project, I have no problems taking debt on. I'm not going to wear debt-free as a badge of honor. Santana was always meant to be a small, modest starting mine that can get bigger in time. But more importantly, you can take debt on for project number 2 with the first mine up and running. You never want to take debt on for project number 1 if you can avoid it. So Cerro de Oro is the game changer for the company. I think it's going to really vault the company well beyond a typical junior producer profile.
Right. Okay. But having a nice tidy balance sheet is all well and good.
Yeah.
And talking about economic answers is all well and good, but scale's the name of the game. You've got to show intent and ambition here. Clearly, project number 2, that will start giving you those sorts of ounces. And the third project?
Well, Fortuna's sitting there already permitted, waiting on, it's 50,000 ounces of production profile. The reason it's sat is it's small, like that PEA we did in 2018 was based on a high-grade starter pit, 5-year life. No one likes that. However good the economics were, and it was sub 500 AISC, no one likes a short mine life.
Right.
So we know there's lots of exploration upside there, and the view we've taken is we'll build these open pit heap leaches first, generate the cash flow to do a lot of exploration there so that when we're turning Fortuna on, it's turned on with appropriate mine life and probably a greater scale than that 50,000 ounce. So that's why it's kind of sat in the back line, but it's not a bad third string quarterback.
It's not, but again, I talk about no rest for the wicked. You kind of get it going. You've got to get going, show ambition and intent with all of these things. It's been a difficult environment. Good projects are becoming marginal projects. Companies are becoming cash constrained. You've had, we're in a lucky position with Great Bear and the rest of the group as well, to perhaps be able to walk into meetings and talk about money, and it may not necessarily be as expensive money. So is there ambition to grow Minera Alamos through acquisition, or is it going to be a bit more organic?
I think we can do, like the first phase of Minera's growth is to build out this kind of 150,000 ounce plus profile. And we can do that organically from our existing asset base. The question thereafter is, and we will in that time continue to look at M&A opportunities that are out there. And there are opportunities abound because of this decline in the market. But I think we have enough on our plate just sequencing 3 successive builds, build out the cash flow, that's going to make those targets a lot easier to look at. And then we can either look at an MOE type deal where the industry always says that scale is rewarded. Don't think you should do a deal for the sake of scale. But I think an MOE would suddenly immediately give you jurisdictional diversification as well, which is just like you want to be a multi-mine asset company, you want to be a multi-jurisdiction one. Not all over the world, but maybe an MOE can give you Canada and Mexico, for example. Or, and I think when we're looking at the state of play with the mid-tiers and the majors, they're all scaling up. They're all doing their MOEs or taking out each other. So there are less and less companies. There are a lot of exploration companies, maybe too many, that don't want to build stuff. And they maybe have an exploration project that profiles at 70, 80, 90,000 ounces a year. That doesn't move the needle for many companies anymore, but it absolutely would for us.
Well, that's what I'm getting to, because you have a shape and a design to you know what you do, how you do it. We talked about it in the early days, because it wasn't necessarily was seemingly attractive for most companies to go after. I wonder if those opportunities, there are a few more of them available to you. Isn't now the time? I know you've got a lot on your plate, but at the same time, there's deals to be done, there's bargains to be had.
There are, and I think you have to make sure that you don't exhaust your bandwidth. When this coming year, we're going to be permitting the next mine and getting ready to construct it while still ramping up and expanding Santana, and deciding what we want to do with Fortuna. We're a very lean group. It doesn't mean we're not going to evolve as a group and expand the group, but I think everything has a natural pace in order to do it. I think the opportunities will abound for us, because one thing we have seen is not, when gold rallied up to 2,000, people said to me, are you finding a lot more competition for the assets you're looking at? And I go, people maybe want some more money for them, but there hasn't suddenly been, it's $2,000 gold. Let's start building mines. We're in an industry where we have so many companies focusing on that kind of Great Bear. They want to be that next Great Bear, the front end of the curve. Very few people want to build mines. There are some great mining teams out there, but they can't build all these projects. Yeah. So I think that actually is going to keep deals available for us, even as the markets turn and perhaps get more favorable for some of those companies to do some things themselves. They still aren't going to be building what they're finding.
Is that about skill set? Or is that because the increasing cost environment we've seen this year with COVID, supply chain issues, inflation, et cetera, people are reticent. Companies are reticent to come to market with economic studies, because you can judge someone when there's an economic study. Then it goes, you're not making money. Commercial production, I won't say those words to you. It's got to be economic ounces. You've got to be able to fund the build without,
Yeah, we don't. There's a lot of projects that probably should never have been built. I think I've always thought that $1,500 gold was good. 17 is very healthy. I think what these prices have exposed is there are a lot of very unhealthy operations out there. So when we conceived Minera, it was in a 1250 gold environment. The problem with the cyclical nature of the sector is there were great years and then lots of lean years. We wanted to build a business model that didn't need higher gold prices to make it tick. And that's why, it's not just that we build these mines very cheaply.
Yeah, first one was the next one's being built for what?
30 million US.
30 million, right?
Yeah,
okay.
For a 60 to 70,000 ounce a year, sub 800 AISC project through its first 4 years. Wow. And that's not a reboot of an old mine with any. That's a brand new mine in a great part of Mexico in northern Zacatecas. But we also this year have kept in this slow, steady ramp up at Santana. Our direct costs of production are $800 an ounce, and that's been consistent Q1, Q2, Q3. So you're seeing a lot of year-on-year AISC increases of the majors even that are 16, 17%. We've been able to keep our operating costs flat as well. And that's allowed us to, gradually strengthen the balance sheet, even when we're not pushing the production profile too much, as we take these early steps as a new gold producer.
Okay, so it's kind of low cost entry point for you. You're ramping things up with the next projects, and I know you've got a lot on your plate here, and maybe you should focus on that. And I know all CEOs say we're looking at opportunities all the time, but 2023. We hope it's different from 2022. That was a tough one, I think. Only in the sense that gold prices say it isn't so horrific. 1,700, 1,750. That's pretty good. It's just that costs have gone up. So I think I actually quite like these environments, because it means these marginal projects get seen for what they are, and teams get seen for what they are. and I just wish the reporting I wish they'd be held more accountable for the reporting. So I'm trying to work out how I judge you, Mr. Doug Ramshaw, and Minera Alamos next year. So what are the numbers we should be looking at from you, which are important? What means something?
I think if there's to me, when I'm looking at an investment myself or my own company, I think, okay, what's our greatest risk? One of the reasons we've taken a slow and steady approach to ramping up Santana is we're about to enter our third year of a warmer, drier La Nina event. It's created those drought conditions in Southern California and in Northern Mexico. So water availability was there last year or this year. We've made money every quarter at the operations level. But if we expanded production too quickly, is there enough water availability? You're managing your working capital and your cash flow at site. So we've taken a slow and steady approach. The climate should be shifting to more of a weather neutral thing. So I think that's less of a risk next year. So for our business model, we've sold this business model that we can build multiple mines rapidly, one after the other with low capital costs. I think our capital costs are very insulated from the inflationary pressures. So I have zero concern on those. The biggest risk to Minera is we're going to have the permit applications in for Cerro de Oro early in the new year. We're expecting them back by year end. In reality, if those permits took 18 months and not 12 months, then those future cash flows, should be discounted more in our share price. But if we can execute on those and at the same time demonstrate why Cerro de Oro is even bigger than the base case PEA that we put out, then I think that mitigates that. But any time something is outside of your control, like a permitting environment, which is very good in Mexico, but certain things can drag and were dragging during COVID. That is a risk you have to be aware of. It's not going to stop us from being a viable company because we've at least got the first mine up and running, and we can continue to expand that if there's some delays at Cerro de Oro. And don't get me wrong, we're not anticipating delays, but I always have to look and think, what's the worst case scenario here? The worst case scenario for us is it takes 18 months to permit Cerro de Oro, not 12. That's fine if you're already making money at your first operation. So Santana will continue to grow. It's still small. It was always designed initially to be a small mine that can grow organically. And one of the things we'll look to do in 2023 is start showing where that exploration upside and that expansion potential is at Santana. Because we're not building 25,000 ounce a year mines. We don't mind building one if we can see a path to how it can grow to 60, 70, 80,000 ounces a year. So we're going to try to demonstrate where that upside growth is at Santana next year while we're going through all the boring permitting stuff at Cerro de Oro, which in itself will also get quite a significant drill program next year too.
Okay, I'm concerned about the retail environment at the moment. I think we've seen a lot of value destruction with stories like FTX, etc., crypto, and lots of people have lost a lot of money. So it's no laughing matter. I'm not a fan of crypto, but I don't like that value destruction. But it's also quite damaging for the investing community more broadly, right? So we in mining, as tiny little companies that we are, if you add up all the mining companies in the world, put them together, they're about 50% of the size of Apple, one technology company. So we're tiny. But there's a kind of feeling that from generalists kind of moving into the space that there is a kind of metal super cycle, is the phrase they've latched onto, and that perhaps things could get a lot better. But that's in the context of battery metals, right? That's the kind of driver here. Precious metals has not had a kind of good run of it, despite what you think of the current share spot price. You can function with that. Well, if you're a good company, you can. What's gold got in store for it, and what's going to bring new investors into this space? Again, because they don't. The words are different, the vocabulary is different, the rules are different.
Yeah, I mean, it's not just been a bad 2022. I mean, the market peaked in September 2020. It's been a death by 1,000 cuts for 2 straight years now. So we saw record margins in September 2020, and then with costs going up, we've seen a contraction of margins for 2 years straight. So for that to correct, we need to see a higher gold price in real terms, because inflation is not going away anytime soon, and this pressure on costs is not going away anytime soon. I think crypto were significant headwinds for gold earlier in the year, and I think they're less so now. And so I think all eyes point to, when the US dollar is kind of going to peak, because I think whilst it's great operating in countries with, where 70% of our costs are local costs are in pesos, optically for the investment community, I think they need to see a gold price in US dollars move, a GDX, and GDXJ, that, these bellwether ETFs for the sectors starting to show positive traction. Does that come in 2023? I mean, I think we're all hoping it does. Especially companies that absolutely need higher gold prices to make their operations make sense. I think the future has to be brighter than the last couple of years. The battery metal, super cycle, copper, and everything else. I think that some of that copper has just been is just on pause for a little while, but it's coming, and it's coming with a vengeance. Gold, I think will have its day. There were people that were frustrated with gold this year because it's like, well, look, finally inflation's moving, and what's gold doing? There were other forces at work, and I think we're gradually seeing those layers of headwinds that gold was battling with dissipate. And I think we'll continue to see that. So hopefully we'll have a positive 2023 for gold.
Well, I think it's been interesting for some of the generalists that have come in and been talking to us and saying, what do these words mean? And they can sort of understand the utility of some of the battery metals, right? They can see the functionality of it in terms of whether it be cars and batteries, or maybe huge infrastructure plays, which are being, promised by politicians. But for gold, the utility isn't immediately apparent there, and because the normal rules, financial, commercial, economic rules for gold don't seem to have applied for the last 2 years, as you say. You'd normally expect in these sorts of things, gold should be flying to 3,000 is the sort of number which is thrown at us all the time, but it hasn't. So I could see the confusion in the eyes of people I'm talking to about how gold will behave going forward. It's 50% of mining. It's a big, important commodity.
But it's a big if. It's had a history of disappointing any opportunity it can to disappoint. I think silver does the same thing. It's like silver squeeze moonshotting emojis with tweets on silver. But precious metals have disappointed for a long time. But I do believe most people, they'll look at this sector and realize they probably need some exposure to it. Sometimes, you're better off having exposure to the metal because the companies that produce it are, have their problems, right? And so, this inflationary environment we're in right now, I mean, it's causing problems in all aspects of the world economy. I mean, we're seeing it now in London with all these pay awards that they're all wanting, 10% and stuff to keep up with inflation. I mean, it all layers in on each other, and gold is no exception in that regard. So where is the light at the end of the tunnel? I don't really know, and that's why I've never wanted to have a business model that is reliant on needing higher gold prices. I will gladly take them. The more money I can have, we have a business model where we can see real reason to reinvest in the growth of this new gold producer. But do we need higher gold prices to operate? I think that's the question we should be asking of all our companies we're investing in. What do you need? And if it's, you need that $3,000 gold, market, or that $40 silver market, it's like maybe you should question, that company is going to fall into this typical hot and cold cyclical nature of the commodity cycle, rather than the better companies are the ones who are able to ride through the worst of times, still making money, just not as much.
Okay, talking of the unexplained and riding through the worst of times, I want to know if there is an explanation for your share price has come under a lot of pressure recently. Looks like a bit of selling going on. What's happening? Is something you're aware of? Well, clearly aware of it. What do you know? What do you know?
Yeah, I mean, it's ironic because almost 2 months ago, we came out with the Cerro de Oro PEA, and no stock goes green on an economic study. It's always a sell on news event. We were green, and we were actually briefly up on the year, this year of all things, at the beginning of October. And October 25th, clearly a seller entered our stock, and it was aggressive. And in a few days, they took our stock from, 47 cents to 39. And as the selling continued, and by a process of elimination, I was able to start ruling out where it could come from. I don't have official confirmation, but it's
one party.
I believe it's one party, and they finally got done this week. But it's been 5 or 6 weeks that, it's frustrating beyond belief. And our shareholders, who are our second best asset, behind our operating team in Mexico, they have shown incredible patience and loyalty and faith in our business model. It was a rude awakening for them during that time. And that was what frustrated me about it more than anything else. Now, the stock recovered yesterday. Some of that loss, as I think people have figured out, the seller is gone. But of course, it came right at the worst part of the year, when it's hard to get people to buy allocations and bid up for the stock. It exacerbated any tax loss selling idea that people had, which I'd say two months ago, we wouldn't have probably fallen into that category. So we've ridden it out, and now it's up to me to get the message out that, not only was it a decision that wasn't reflective of the Minera story, it was a Minera stock issue, not a Minera story issue, that it actually presented an opportunity for a lot of people that maybe missed the stock when it maybe got ahead of itself, last year. Wouldn't have thought I'd see it down at these levels. And I took advantage of it as well and bought some more, because I've always, tend to, when I have money around, it's like, what do I buy? I'll put my money where my mouth is and buy my own stock.
Okay, explain to me this, because you had the same issue with Cisco
a year ago.
So literally a year ago, right? So you maybe knew a little bit more this time around than last time, but it doesn't take away there's a bitterness of it all. Why don't companies like that come and talk to you? Why don't they say, look, we want out, can you arrange some kind of swap here for us? And
in the case of a Cisco, that's what happened.
Yeah.
I did, but they started selling their position when they needed cash. And it was only really when they put out their September 30th financials as the Cisco development, people realized just how much cash that they had burnt. And so it was understandable. But of course, at this time of the year, it's hard to find people to take on allocations. So in the case of a Cisco, I spent December of last year working with my bankers to build up a shadow book of business. And we bid them on January 5th at market, no discount to it, at market, and crossed their last 41 million shares out. So it does make me ask the question, why, if someone's got, in this case, I believe 19 million shares, which they had spent 2 years accumulating, blowing out in 5 weeks without a call? When I'm not going to come back to them and say, oh yeah, I got a bid for it, but it's going to be a 5-cent discount or whatever. I've done multiple crosses at market. You shouldn't be afraid of me. I'm not saying this to the next big seller. Come call me. Don't be afraid. I won't bid you a discount. I'd prefer you to stay as a holder, but it was a mandate change from a fund. And unfortunately, I always say to people, institutions, it's a double-edged sword. And it's a classic example of that. And
when they go, they got to go.
When they go, they got to
quick.
Go.
For sure, I totally get that. As a family office, we can't invest because of those reasons. If we can't get out quickly, we're not going in. So there's nothing they know. There's nothing you know. We should lend cause for concern to anyone. It's business as usual. Story hasn't changed.
Yeah, no, not at all. In fact, the funny thing is, if it's a fund I'm thinking about, they bought us recently as August. We met with them in September. They lauded us for our outperformance relative to the sector, and my guess is it was an investment committee decision in October that, following the PEA for Cerro de Oro, which we moved up on to being up on the year, it was just an investment decision that comes down. I mean, this is a fund that has it's $1 billion. If it's the one I'm thinking of, it's got $1.5 billion under management. It's got 5% of that in Barrick. We had a 0.4% allocation. It looks like they've zeroed out lots of smaller cap positions, and maybe they're moving big cap, because when you've had the Newmonts and the Agnicos that have dropped 40% this year, you often see these funds go, we're going to go big cap for a while, then they come back down the food chain again, only to rinse and repeat this. This is why I like our generalist investor funds.
Yeah.
They have a 3 to 5 year timeline. They're not so tied to a particular sector, that they're very patient, supportive shareholders. I wish I could clone our generalist investors and avoid the resource funds, but sometimes you've got a good story and the resource fund buys it, right up until when they don't.
Thank you for your time today.
Thanks, Matt.
I know you got a lot of meetings this afternoon, so appreciate making time to come see us.
It's great to see you, not through a computer screen.
I know.
Without my red wall behind me.
Is the red wall back?
No, it's gone now.
We've got a majestic bookcase.
Yeah, exactly. I don't own books, but
you'll get there.
Yeah.
Well, I appreciate your time. Thanks very much, Doug.
Thank you.